Okay, good evening, everybody. Evening? Elongate that one. Hope you're all doing well. Hope you're good. Thanks for joining us on a Wednesday night, 24 hours later. Some of you have seen, I had a bit of a family emergency yesterday. I had to take my son to hospital. Everything's all good, but you know, you can never be too sure. And who doesn't enjoy 4 and a bit hours or whatever it was in hospital with a 2-year-old? So, yeah, testing all round. Just let us know if you can hear us on the mic. Let us know if the volumes are right, and you can see me. Apologies for the hair; it's absolutely crazy today, but we are where we are with that. I'll just wait till someone actually says they can hear me, okay, before I try and do anything else. Okay, hi there, Greg. Hi there, Ken. Glad you can hear. So that's all good. Right, what are we going to cover tonight? Well, we'll go over some news. I'm not going to lie, the majority of the news that we're going to talk about is the main point of today's discussion, which is to have a little review of the Ripple versus SEC rulings, which came out last week. Some fascinating information that's out there. It's really interesting doing some research around how people are interpreting this. And, you know, the nuance in the wording that's being used actually has some significant ramifications. I've read the ruling probably about 5 or 6 times now. I've watched a couple of arguments from either side to try and draw a rounded picture, but obviously I am, 1, not a solicitor or a lawyer or whatever they're going to be in America, and 2, no particular expert on this. So I'm just going to share my views of what I think it is, how I think it's going to be interpreted, and where that could potentially go. But I think it's pretty interesting all the same. We've had plenty of questions this week from the question sheet, so thank you for those. We're going to run through all of those, mixture between just general questions and also some price analysis, which we'll have a look at. We've got 2 research tokens to look at today, Hex.com and Pulse Chain. I swore I'd never do 2, but I think these 2 kind of need to be done together. So we're going to cover through those. We're going to get into some price action, have a look at where we're going. You can kind of see already on the charts, BTC being, oh, no, you can't because I haven't flicked it across. So let's move everything across, and then we can talk about what we can see. So what you should be able to see now, if I've done that correctly, is BTC on the larger box. And although I've zoomed out, this actually is a full month of us just ranging in this area, anywhere from about 29,500 up to around about 31,500. And whilst we are at the lower point of that, it has been pretty a boring week, except for obviously Friday or Thursday and Friday, where we had that huge pump up. And then that correction back to, we lost everything that we gained and some in there. And then we just carried on trending down to the bottom, which is what we were kind of expecting to do. So we're still showing some decent support around about 29.5. And again, pretty good resistance around about 31.5. We'll have a look at high block and liquidation levels and other factors that to me, why those levels are proving difficult to break. In terms of the dollar's been in a bit of a nosedive for the whole month of July, really. And whilst we have actually recovered back above 100, although this candle hasn't closed today, we have spent the last few days actually below 100, in and around about 99.8. Ethereum kind of followed what BTC did. I don't think it lost as much as BTC, and we may be able to explain why a little bit later on there. But it's got something to do with XRP, that's for sure. And the stock market, US 500, S&P 500, continues its rip to the north at 4,570. As a matter of fact, let's just bring this one up, because what I was amazed at is I was actually going to look at sort of where it got to in the lows in October. If you remember, just before FTX happened, we kind of had this W forming down here. And we were down at like 3,500. We've done 1,000 points in what, the past 9-10 months. An incredible rip, and this is really starting to, you know, be climbing without any pullback. So we'll have to just wait and see where we're getting there. You know, the data coming out from the US has been particularly strong in terms of how they're clipping inflation. Interest rates still remaining high though. The UK got some decent-ish news with CPI data today. That dropped down to 7.9. I think it was expected to be 8.2, so it fell further than expected, which again is good, but we are lagging well behind the United States. So again, more work to be done there. Be interesting to see how the FOMC are going to react with that significant drop on the US CPI data. We'll have to actually check. I don't know when it is, but this is the last one before the summer break. Let's just bring up Forex Factory. I think it's next week. We can have a look at when that comes out, but Got tomorrow. I'm not really interested in that. Sorry, I got to do it the slow way. Maybe it's the week after. Of course, maybe it's because I didn't scroll down. When is it? I must be just blind. I'll find that out. I'll get my actual website up. I can't do it day at a time. But yeah, we'll have a look at that. But definitely some interesting times ahead with that. Wednesday the 26th. Thank you, Adam. In terms of everything else, obviously there's a little poll going up just about XRP and its ruling, or Ripple and the ruling, should I say. Feel free to add any comments. If you can't decide between Ripple or the SEC, you think it's both, I'd just love to understand why. As always, though, if you have any other comments you want to do, just dump it in the chat. I'll periodically be looking over. Hopefully, I'll be able to answer them for you, or at least certainly delay long enough till I understand it. Right, so let's just jump into the news. The first thing I want to talk about is something that we actually brought up at the beginning of the year, and we've covered it a couple of times since then, but actually the event is right on our doorstep now, so it's probably relevant to talk about, and that's the Litecoin halvening. So, as most of you know, that follows a similar pattern to BTC in that it has a halvening every 4 years. And the next one is actually in 14 days' time, or just under 15 days, really. 14 days and 17 hours. Of course, that might fluctuate ever so slightly, but we are getting very close. Now, why do people talk about this, and why do we kind of get excited? Well, in previous bull and bear cycles, or bull cycles, should I say, Litecoin, which has its halvening 1 year ahead of BTC, approximately, it's kind of like about 9 months actually, has always had like a fairly strong rally leading up to the halvening, and then a pullback, and then from that Bitcoin has started its move into its it's sort of like a tempered move into its halvening, and then the sort of exponential rally after that. And so people have been wondering, how's this, given this has happened a few times before, will this repeat itself? And have we been experiencing the Litecoin pump? Well, actually, I always do this. I have the article down at the bottom rather than the top. But as it says here, I mean, the article, perfect, it's already wrong, saying it's 13 days away. But it's already questioning, well, where is this Litecoin price rally? We try and anchor ourselves to fractal patterns that have happened in the past. And as we'll see in the chart at the moment, potentially, we're not quite seeing what we would have seen in the past, which may scare some people into thinking, are we now going to be in a bear market for longer? Is Bitcoin going to repeat itself like it has in the past? Is the 4 year cycle over? I think it's all valid questions to ask, and we'll try and explore those now. So the article goes on to say that with Bitcoin's halvening still almost a year away, by the way, it's roughly around about the 9th of April 2024, so it's probably about 9 months away now, 260 odd days. Litecoin miners are already bracing for the impact. In less than 2 weeks, Litecoin's byte subsidy will drop from 12.5 to 6.25 Litecoin per block. Despite its fair share of controversy, Litecoin remains the 12th largest cryptocurrency by market cap at around about 6.8 billion. Miners currently rake in 7.2 thousand Litecoins in block rewards daily, which equates to around about 670,000. Richard, you're saying, does it keep stopping for anyone? Is that I've got excellent condition and good analytics, so if someone else can just let me know if it is. Could well be the case. We've had that problem before, but yeah, I'm just going to keep going. But if people are struggling with it, let me know. As a halvening, there's major investors appear to be seeking an easy trade, with popular trader Mikey Bull Crypto and other noting whale buying up almost $60 million worth of Litecoin in the past 2 days. Maybe we are starting to see the pump. But in terms of BTC, there seems to be little worth celebrating. Litecoin currently trades at all-time lows against a larger cryptocurrency. We know that. We know we've been experiencing Bitcoin's dominance over the last 6 months, been utterly destroying altcoins. Everything's going down, and not even Litecoin has been able to break away from that. And we can kind of see here, this is the Litecoin BTC chart. Really kind of struggling. Although, what's this? Monthly? Must be monthly. So in 19, if you have a look, it broke away from BTC, so everything else is getting crushed. 2015, this was the run-up. Again, the halvening happened in August. Had that. But what we've seen here is next to nothing. Minuscule, really. And people are concerned that that might be reflecting on where it is that we're going. If we actually have a look at the proper Litecoin chart, and I've kind of, let's get rid of that. Let's just blow this up a little bit in terms of monthly. You can kind of see, so each of the lines are the months that they occur. Now, doesn't necessarily matter, but in both August 15th and August 19th, it was the back end of August. Obviously, this is just one bar that represents it all. But you can clearly see we had a good 3-month run-in. And the growth, sorry, I've got a lamp in the way, so I can't actually see where my price range is. We're just doing body to body, about 230% increase in that one. From this one here, it was over the course of 6 months. And again, we had about a 300% increase in that one. And they were fairly solid. This one's been a lot choppy. I mean, generally the trend has still been going up. So, you know, people can argue that it's been there. It's been 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 months, but very flat for the last 6. And actually, I mean, we're down here. It's actually only at 80% on its all-time, well, its recent bear market lows. So, yeah, we started off the year with Litecoin having a very strong first quarter, and we were all thinking that this is it. This is going to be the catalyst for going. But actually, the last 6 months, we have seen the price of Litecoin and a lot of altcoins, and I suppose BTC to some respect, really being suppressed with that. This month in particular for Litecoin, I mean, that has made a difference of rather than being 80%. Prior to that, it was almost 115. So it has had a bit of a kick in just on that pullback here. But is it the case that miners, well, people are already starting to, maybe not sell the news because we are ahead of it, but sell in advance of that, thinking that, you know, all that normally happens afterwards is we do see a sharp sell off. And so people are trying to get ahead of that. I say 13 days time is going to take us actually into the first of August, I suppose. Is it 1st of August? What date does it say? 3rd of August. So maybe I should have had that here, like that. But anyway, we shall see where that goes. Looks like everyone else seems to suggest it's okay. So that's good to see. But yeah, just let us know if you're having any problems. It might take me a while to catch it. But yeah, we'll go from there. So, you know, the thing I kind of say, so I started the year, I was talking about how Litecoin in previous cycles has really, you know, paved the way for the way Bitcoin's going. We've not necessarily seen that. And I think the reality of this is this just shows the problems that you have with fractal patterns, particularly in a market which is so new. For any 2 prior cycles, you know, this could be an anomaly, and then the next 50 cycles could do exactly the same. But we only have going to be 3 data points at the moment. And so it's kind of hard to sort of hang your hat on these fractal patterns. I am still a believer of the component of the 4-year cycle, certainly for BTC, and I will be until that breaks. But maybe this is the year that it does break. It is why I don't necessarily actually plan individual trades based on fractal patterns. I just use them to try and help build the picture of whatever it is I'm particularly looking at. And at the moment, I'm not saying it's huge alarm bells, because it has still seen an increase, and the increase isn't as much. But it hasn't, Litecoin hasn't moved as much as before. So maybe that is to suggest that either we're going to be in this bear market for longer, or Bitcoin leading up to the halving is only going to have a, you know, mediocre rise out of its current position. So we can have a look at what that means from price action a little bit later on. There have been a few other news events, but to be honest with you, nothing major. There was some FUD about Binance. I was going to talk about the fact that they, you know, announced that they were going to let 1,000 members of staff go. And that happened the day that we saw the big red candle on BTC. But actually, when you looked into that, you know, those numbers, those figures had been announced weeks, if not months beforehand. So kind of feel like that wasn't really driving it. There's always been FUD in and around Binance, certainly this year. I think maybe it was just another opportunity, market makers taking profits. And people who've been holding Ripple for a long time might have seen that huge pump, decide they wanted to sell, which just drove the market down as well. We don't necessarily know. But so I've just not really bothered covering any other major news events. Bijan, as always, has been putting some great stuff on Discord. So I thought, well, why bother rehashing some of the things that he's put in there? Instead, I'm going to buy a little bit more time just to go over the XRP news, which we will move into now. I'll have a drink first. So you all must have seen this. I mean, even if you have not logged on to Discord for the last week, if you've not turned on a TradingView chart somewhere, you would have seen that we have had a ruling in the SEC and the versus the Ripple case. Now, Actually, I've seen media outlets kind of get how the rulings come about has been wrong, but I think, the very simplest way to say is that the SEC won in certain things and Ripple won in others, and then there are other things that are undecided. Incredibly confusing, I know. Why did the market pump so ecstatically? Well, I think most people just looked at what Ripple won and took that as a net positive. Wasn't really focused on what the SEC potentially won on. And I think we do need to actually go through how both of those findings or rulings came about, what was actually said about those, because they may have impact going on into any other altcoins that are currently being classed as a security by the SEC. So it is worth doing that. I'll quickly cover a couple of these news articles, then we'll get into the ruling itself. It's quite a bit to talk about within those. As I said, I've read it about 5 or 6 times. I've made about 9 pages of handwritten notes. The worst thing I could do because my writing is atrocious. But we are where we are with that. I'll try and read through those to make sure that I stay on track. But the judge rules XRP is not a security in the SEC case against Ripple. So Brad Garlinghouse, we're going to use his name quite a lot because he is actually named in the case itself and is being sued or was being sued by the SEC. Recently opined, I don't even know, that the case would end soon, but the fight for crypto wasn't over. Ripple Labs scored a victory in the United States District Court of the Southern District of New York on the 13th of July as Judge Torres ruled partially, this is the key, in favor of the company in a case brought forth for them by the SEC dating back to 2020. It's December 2020. So according to the documents, Judge Torres has granted summary judgment, we'll explain what that is a little bit later on, in favor of Ripple Labs, ruling that XRP token is not a security, but only in regards to the programmatic sales on a digital exchange asset. That's not necessarily true either, but programmatic sales, what they're classing at is basically sales that are made on exchanges. We'll go into that in a little bit more detail later on. The judge did rule in Ripple's favor from other things as well. Anyway, SEC did manage to notch a victory of its own, as the federal judge has ruled that XRP is a security when sold to institutional investors, as it did meet the conditions set out in the Howey test. That's a very famous court case that happened in 1933, Howard versus, I don't know who, Howey, sorry. That was about an orange grove, and that's why the Howey test is there. The SEC lawsuit sought to compel Ripple to stop offering XRP token under the premise that XRP was a security and thus required additional regulation. We're going to go through a lot of this. It doesn't necessarily matter. But what was interesting was, if those of you that were on Discord, I was like, Ripple's had a decent pump today. It was up 25%. And then 10 minutes later, I think Bijan put the news article that Ripple had won their case. And we saw it go from about 40 cents all the way up to 80 odd cents. It flew, nearly 100%. And I talked about a couple of weeks ago getting a couple of grand's worth of Ripple just in case the announcement happened. I never bothered getting around to doing it. Missed that boat there. But it was still nice to see. Then the markets kind of broke north. We saw a lot of other cryptocurrencies rising that way, particularly ones that had been singled out by the SEC as being securities. So the likes of Matic, ADA, Solana, Near, all had really strong growth over that period. As we've already talked about earlier, it wasn't long lasted, and we saw a decent retracement of that, with the exception of the tokens I would class, certainly XRP, but ones that were deemed as securities, because they actually managed to withhold quite a lot, of the gains they made. They didn't give them back. Anyway, let's get back there. I don't think there's anything more to say in that article, and probably not much to hear. XRP's face a rocky road to recovery ahead of the Ripple lawsuit. This was just the lawsuit was actually, so the date of this article is December 28th, 2020. The lawsuit was filed on the 22nd of December, 2020, and at the time, the price absolutely dropped. I think it went down to about, I think I got to have a look. Was it about 18 cents? Doesn't say in here. Of course it doesn't. We have a look at a chart a bit later on. But it really dumped down. I remember watching some, YouTube XRP Moon Boys saying, right, I'm buying at this price here. And to be honest with you, they have not. I mean, they've held it for a long time to have to do it, but it's been a very, positive return. If you're getting it at sort of anywhere from 18 to 25 cents, whatever it actually got down to, then it pumping up to 80 cents. And that's why I was saying that actually what we might have seen was by the time America woke up to the news, some XRP holders might have thought, you know what, now's the time to actually secure some profit. I've held this long enough, let's cash out. And maybe that's why we saw the market start to reverse. But let's actually have a look at the judgment itself. I will put this document in Discord. Unfortunately, I have a feeling, I'll try and save it, but the bits that I've highlighted probably won't be in there. The document itself is 34 pages long. It goes into quite a lot of detail, and a lot of it is taken with references and footnotes and previous cases, which unfortunately that's where the meat and the bones of a lot of this detail is. And unless you read that, if you just read the narrative in the main article or the main summary, and you miss some of the footnotes or some of the references I refer back to, it actually can have a bit of a different spin on things, and particularly when we talk about what this could mean going forward. As I said before, and I'll reiterate it now, I am no legal expert. This is just my opinion of reading it a few times, watching a couple of very interesting, knowledgeable people on the subject, definitely from different sides of the camp in terms of how successful they think this has been, and then I'm just trying to give an honest opinion of that. But let us run through what has been put. So, as I've already mentioned, and perhaps why there was some confusion, straight away in the initial summary, the SEC motion is granted in part and denied in part, and the defendant's motion is granted in part and denied in part. So we already are off to a real confusing thing of, okay, what does that mean? It doesn't look like there's a winner or a loser in that case of actually they both won, they both lost. So as I say, you can go through all of these different claims, you can understand what they particularly are, and they talk through them within these footnotes. I'm not going to waste any time because it's not particularly irrelevant. But what the judge then does is she actually gives a very detailed let me just have a look, wait a second here, a very detailed breakdown of the background towards XRP, which is quite interesting, and some of the things that perhaps we aren't particularly, or maybe we'd forgotten, or some of you may actually not have been necessarily aware of. But some of the interesting things that came about, which I think will prove pivotal towards the case, was that actually XRP itself, the token, predates Ripple. So XRP was around before Ripple was even formed, and that is important. And that actually could be a very unique situation for XRP, where it stands it above and beyond some altcoins that we can talk about a little bit later on. So it was launched in 2012, and it was a fixed supply of 100 billion XRPs. Ripple came along around about 2013, and what happened, which again was another very unique thing, was that the founders of XRP, the founders also of Ripple, instead of selling tokens to Ripple, they donated 80% or 80 billion tokens to Ripple. So there was no exchange of cash for those. So there was also no ICO. There was none of that was necessarily required. So no sale and no ICO. And of course, it's a very long-winded way of explaining how that went about. But basically, the founders retained 20 billion for themselves. And it kind of explains Larson got 9 billion of those and provided 80 billion of the XRP for founders. They didn't sell any of the XRP before the launch of the ledger, and Ripple never owned the 20 billion XRP that was retained by the three founders. So the judge is laying out straight away that these were effectively just a bit of a gift. Kind of goes into how that went about and some of the different transactions that happened. But then effectively at the times before the end of 2020, when the SEC brought the case to it, Ripple owned anywhere between 50 and 80 billion XRP. And so it then goes to explain who Ripple are and what they did with the funds and why the SEC has a bit of an issue with that. And I might repeat myself a little bit here, but just there's certain nuggets within each of those which are so important. So first, Ripple, the wholly owned subsidiary, sold XRP directly to certain counterparties, primarily institutional buyers, hedge funds, and ODL customers, pursuant to written contracts, and they're what we're going to be talking about as being the institutional sales. It was alleged, or the SEC alleged, that Ripple sold around about $729 million worth of XRPs to institutional sales. So that's the first figure we need to remember, $729 million. The second problem the SEC had was that Ripple sold XRP on digital asset exchanges programmatically. So these are exchanges like Coinbase and Kraken and all the ones that we know and love. And through the use of trading algorithms, Ripple's XRP sales on these digital assets were blind bid and ask transactions. Okay, so That's important, and the judge is going to go into that a little bit later. But what they're saying here is, people didn't necessarily know who they were buying. They were just putting in either a limit order or a market order. It was getting read by the exchange. They had no idea who's the other side of that, and then the transaction was made. That will become important later. Ripple didn't know who was buying the XRP, and the purchasers didn't know who was selling it. The SEC alleges that Ripple sold approximately 757 million of XRPs in programmatic sales. I'm going to get tongue twisted here. Okay, then there was another issue that the SEC had, and that was Ripple also distributed XRP in a form of payment for services, which they're classing as other distributions. Now, in this, it was, it says here, as one example, Ripple distributed XRP to employees as a form of compensation. So they weren't sold, they were just effectively given. Similarly, in other initiatives like Xspring and other funding parties, they were just distributing XRP. So they weren't sold to them, they were just given to them so that they could do with them as they saw fit. In sum, the SEC alleged that Ripple recognized a revenue of 609 million from the distributions of XRP to individuals and entities in exchange for services. And then the final issue that the SEC had with Ripple Labs and their owners was this one. So in addition to Ripple sales and distributions, Larson and I'm trying to think what his name is. Is it Brad Larson? No, it's Brad Garlinghouse. I can't remember what Larson's first name is now. I'll have to scroll to the top and have a look. It's only 4 pages away. Should have written that bit down. Yeah, Christian. There we go. So Larson and Garlinghouse offered and sold XRP in their individual capacities. And what they're saying is from between 2013 and 2020, Larson sold on digital exchanges programmatically and made 450 million from his sales. And that was between them, 450, I think. And Gerlinger, he had separately. I can't remember where his was written, but his was about 150 million. So again, around about 600 million just between the two of those. The defendants, it should be noted that the defendants did not file a registration statement as to any of the offers or sales of XRP. So the SEC obviously wanted us to know about that. And then what the judge does is she kind of, before she goes into any findings or any breaking down of sort of the law or whatever, she kind of then explains what the defendants did, what Ripple Labs did in terms of marketing campaigns for XRP. And, it's quite a few pages here, so I'm not going to go into it. But the SEC basically have said, look, from 2013, defendants went on extensive years-long marketing efforts to represent that they would search for purpose and use and value of XRP and casting XRP as an opportunity to invest for those in others. They kind of just break down where it is, and the judge then summarizes what the defendants thought of it. But again, since at least 2013, Ripple had prepared and distributed documents that describe the company's operations, XRP's trading market, and the XRP ledger. For example, 2013 and 14, Ripple created 3 brochures, Ripple for Gateways, Ripple Primer, and Deep Dive in Financial Professionals. These documents were distributed publicly for prospective and existing XRP investors and outline, among other things, the relationship between XRP and Ripple's business model. And that's going to become key because when we talk about the Howey test, we're talking about a common enterprise, okay? So an expectation, we'll go through them in a bit more detail there, that a third party is going to do some work for you to make some money. So the SEC is trying to lay out their case that, look, these guys were clearly saying that, get XRP, Ripple are going to do some hard work for you, and your XRP is going to be worth more. It then talks about, XRP and Ripple, I keep on referring to it, Ripple Labs weren't, just sticking their head in the sand. They went and took some legal advice on what they thought would constitute an offer and a sales. Whether or not the SEC thought this was a smoking gun doesn't necessarily matter. But it talks about which law firm they used, and they requested information to review the proposed product and business structure and analyze the legal risk associated with Ripple and recommend steps to mitigate this. The memorandum analyzes, amongst other things, the legal risk associated with selling XRP. Specifically, it states that if sold to investors, XRP tokens are likely to be securities. So we alleged that, in early 2012, they might have already been told that it could be classed as a security. And to the extent that the founder's issuance of XRP does not involve an investment of money, there is a low risk that XRP would be considered an investment contract. So where they've been giving out XRP, because they didn't sell it as an ICO or take any money for it, then actually it may not have been an investment contract because it was a donation. So there was some information that came out from that. I know it feels like I'm only telling you half the story at the moment here. I'm just mentioning key points because when it comes to the summary, these are kind of mentioned. Procedural background, the only thing that I really want to show there was that was when the SEC launched the case, and then they went through loads of different types of motions to get to the position where we currently are. Now, you probably heard that term summary judgment, and some of you may not know necessarily what that means. But effectively, all the summary judgment is that the judge themselves are going to make that decision. They do not require a jury to, read, understand, listen to, and then make a determination. The judge feels, in this case, the judge feels that they have the information and the ability to make that judgment themselves. Now, it doesn't always necessarily happen. We're going to see a little bit later on an example of that. But all this is saying is the judge is going to make the decision, and those decisions will be detailed below. Essentially talks about Section 5 liabilities and the Howey test. I'm sure many of you do vaguely remember what is in the Howey test, but I thought it's worth just highlighting this bit for others. So under Section 5 of the Securities Act, it is unlawful for any person, directly or indirectly, to offer to sell, offer to buy, or purchase or sell a security unless a registration statement is in effect or has been filed with the SEC as to the offer and sale of such a security to the public. As we mentioned a bit further up there, Ripple never filed anything in relation to XRP. To prove a violation of Section 5, the SEC must show that no registration statement was filed or in effect as to a transaction, and that the defendant directly or indirectly offered to sell or sold securities and through interstate commerce. That's not necessarily the Howey test at the moment, but they're just three things that are mentioned in Section 5. Defendants do not dispute that they offered to sell and sold XRP through interstate commerce. So Ripple Labs said, yep, we did that. They also do not dispute that they did not file a registration statement with the SEC for any offer or sale of XRP. So yep, so hold their hands up to that one. So the question before the court is whether defendants offered to sell or sold XRP as a security. Specifically, the SEC alleges the defendant sold XRP as an investment contract, which is the type of security as defined in the Securities Act, which we've already talked about. Then we get on to the Howey test. So the Supreme Court, I don't know why I didn't highlight this bit, held that under the Securities Act, an investment contract is a contract, transaction, or scheme. So that's for the first thing that needs to be done, whereby a person, number one, invests money, two, in a common enterprise, and three, is led to expect profits solely from the efforts of the promoter or a third party. Okay, and it's fair to say that most cryptos undisputedly meet three of the four things there, and the main thing is about these third-party promotions, and in some instances people talk about common enterprises and whether or not that was the key clause, but generally a lot of them tick three of the boxes. But for it to be deemed as a security, it has to tick all four. If it fails on one, it isn't meeting the Howey test, therefore it cannot be deemed as a security. What's then quite interesting, and I'll talk about this right at the end afterwards, is the defendants, Ripple Labs, basically went, hey, we take your Howey test. This is what they call essential ingredients. Take your Howey test. That's quite old, and it's not really based on cryptos and the new way the world's coming. So we think you should add these essential ingredients to it, and go through. So defendants advanced a novel essentials ingredients test, arguing that in addition to the Howey test, all investment contracts must contain three essential ingredients. Those being a contract between promoter and an investor that establishes the investor's rights to an investment, which contract two imposes post-sale obligations on the promoter to take specific actions to the investor's benefits, and three, grants the investor a right to share in profits from the promoter's efforts to generate a return on the use of investors' funds. It's not necessarily important that we need to digest out what is, because the very next line says it all. The court declines to adopt the defendant's essential ingredients test. So the judge just threw that out, went, you know what? No, we're just doing it on the Howey test. And actually, that's quite important, because now we have clarity on how we can determine if a crypto is a security. Because this judge is saying you don't need anything else. All you need is to satisfy the Howey test. If you can satisfy the Howey test, it's a security. If it doesn't satisfy the Howey test, it isn't. So actually, in that statement there alone, we've got some clarity on where we're going. That should help people in the future, or hinder, depending on how you want to look at it. But I think they're a positive step in going through. Again, she goes through why she doesn't want to take those additional ingredients. And then we finally get to the analysis side of things. Why I highlighted some of this, but it's not necessarily there now. Okay, just one other thing. So the defendants also tried to argue that XRP doesn't have the character in commerce of a security and is more akin to ordinary assets like gold, silver, and sugar. But the judge went and said, hey, this misses the point, because ordinary assets like gold, silver, and sugar may be sold as investment contracts depending on the circumstances of those sales. So she's like, don't shoot yourself in the foot here, okay? You don't want to be classed as those, because that might more eagerly allow you to be argued that you are a security. So she dismisses that out of hand. But this is it. I've highlighted this in blue. This is, I think, the most important 1.5 lines in all of the findings, because this is everything that XRP needs to hear. XRP as a digital token is not in and of itself a contract, transaction, or scheme that embodies the Howey requirements of an investment contract. So there you have it. In I don't know how many words that is, 15, 16 words. XRP is not a security. So now we have two cryptos in all of the crypto space, Bitcoin and XRP, that have been classed as not a security. And we know that categorically because that's what it said. And we know that people rallied toward that because instantly after this was launched, US exchanges started relisting XRP because they knew now they were safe from the SEC claiming that they are selling an unregistered security, because the judge has said here, this is not a security. Now that doesn't get Ripple off the hook, but just looking at XRP as a digital token on its own, it doesn't satisfy the Howey requirements, and therefore it cannot be a security. So a very important statement there. And obviously the Ripple army, the Ripple Moon Boys have taken that very well. And that's why we've seen a lot of news articles and new headlines just completely see that Ripple and XRP have won this, and rather looking at maybe the SEC's victories as well. So, but that is a pretty bold statement from it. I'm just trying to see what I've... okay, yeah. So then we go into what the summary judgment's going to be, and obviously we talked about SEC claiming Section 5 of the Security Acts has been violated, and they've seen 3 sections, and we're going to break those down. So we've got the institutional sales. We talked about 728.9 million, so let's call it 729 million. Programmatic sales on exchanges, 757 million, and then other distributions, basically for services, and that was 609. And then we've also got, there it is, 450 and 150. And then we've also got this fourth one, I don't even get a number 4, in which Larson and Gerlinghouse, they sold their individual XRP sales of 600 million, but they sold those on, they're classing that under the programmatic sales. So we go through institutional sales to start off with. I'm going to try and speed this up a little bit. The SEC alleges institutional sales were distributions of XRP into public markets through conduits, and that some institutional buyers were buying XRP as brokers, while others simply resold it as part of trading strategies. It says that the first prong of the Howey examines whether an investment of money was part of the relevant transaction. Institutional buyers invested money by providing fiat and other currencies, so we know that's the case. The defendants did not dispute that they received XRP, money for XRP for institutional sales. However, the defendants argued that an investment of money is different from merely payment of money. That is, Howey requires not just a payment of money, but as an intent to invest the money. The judge, she's pretty blunt here, not so. And she says, look, your view is not supported by case law. And the proper inquiry as to whether the institutional buyers provided the capital through Howey, put up their money in Glen Arden, or provided the cash in the Telegram case. Defendants do not dispute that there was a payment of money, so the court finds, therefore, that this element has been established. So we know that the first prong of the Howey has been met. The second prong of the Howey exists of the common enterprise, they demonstrate through showing a horizontal commonality. So horizontal commonality exists where the investor's assets are pooled and fortunes of each investor are tied to the fortunes of others. And then we go here. Here, the undisputed record shows the existence of horizontal commonality. Ripple did pool the procedures of the institutional sales into a network of bank accounts under the names of various subsidiaries. And it says, although they were separate bank accounts, they were all controlled by Ripple. And the defendants do not dispute that Ripple did not segregate and separately manage investor funds or allow profits to move them. And the accountants recorded all of this. So the second prong has been met. The court finds the existence of common enterprise because the records demonstrate that there were pooling of assets and that the fortunes of institutional buyers were tied to the success. So there we go. So we've already met the second prong and one to go. The third prong of Howey examines whether the economic reality surrounding Ripple's institutional sales led the institutional buyers to have a reasonable expectations of profits to be derived from an entrepreneurial or managerial efforts of others. So in this context, profit means an income or return to include, for example, dividends and other periodic payments. And then based on the totality of circumstances, the court finds reasonable investors situated in the position of institutional buyers would have purchased XRP with the expectations they would derive profits from Ripple's efforts. From Ripple's communications and marketing campaign, that's why she spent so much time at the beginning of the court document explaining the marketing campaign and the nature of the institutional sales, reasonable investors would understand that Ripple would use capital received from its institutional sales to improve the market for XRP and develop the XRP ledger, thereby increasing the value. So there she is, black and white. That is her reasoning. She goes into a lot more detail now, but we're going to skip through that. That's how she gets here. And then she says further, the nature of the institutional sales also support the conclusion that Ripple sold XRP as an investment rather than a consumptive use. So, it's not that they were burning it and using it at the time. In a sales contract, some institutional buyers agreed to lock-up periods and resale restrictions based on XRP's trading volume. So there was definitely some, high-level, well-educated, well-thought-out process that was being tied into the purchase of these tokens at the time. And then having considered the economic reality and totality of circumstances surrounding the institutional sales, the court concludes that Ripple's institutional sales of XRP constitute an unregistered offer and sale of investment contracts in violation of Section 5 of the Securities Act. So there we go. Round one actually goes to the SEC. Now, we don't know what the punishment for that is at the moment, but we have been clear that they did make anywhere up to just under $730 million out of that. Now, I don't know what the fine's going to be, but I imagine it could be anywhere up to that amount. We'll talk about how timescales when we might find that one out. But there we go. The SEC has definitely won something there. And that also is kind of saying that if you sold to institutional investors, then it's likely anyone else is going to be in breach of the Howey test. Now, as I said at the beginning, Ripple didn't do an ICO. So we don't actually know how the courts are going to incorporate ICOs. As are they institutional investment sales? Are they, sophisticated and educated investors, etc.? That one we don't have an answer for, and I'm not here to speculate because we could do it all night. But in this instance, SEC have won. We move on to the second one, which is the programmatic sales, and the SEC, as I said, alleged that the programmatic sales to public buyers on digital assets, Ripple understood people were speculating on XRP as an investment. Explicitly targeted speculators and made increased speculative volume a target goal. Having considered the economic reality of programmatic sales, the court concludes that the undisputed record does not establish the third prong of Howey. So already she's like, actually, there isn't a passing of the third element of the Howey test. And whereas institutional buyers reasonably expected Ripple would use the capital it received for the sales, it goes on, I'm skipping a bit. Programmatic buyers could not reasonably expect the same. Indeed, Ripple's programmatic sales were blind bid-ask transactions, and programmatic buyers could not have known if their payments of money went to Ripple or any other sale. So this is what she's saying is actually by using an exchange as an intermediary, Ripple weren't directly selling to one individual investor, or if they were, neither party knew who was buying and selling it from. And so the person who was buying it off them didn't know if it was Ripple that was doing it, and therefore they were expecting Ripple to work hard to make it. It could have just been someone selling a bag. And then the judge goes on to say that actually from 2017, Ripple's sales represent less than 1% of the global trading volume. So even if they did know, 99% of the trading volume wasn't being carried out by Ripple to sell. So that's sort of the first nail in the coffin as to perhaps why the SEC aren't going to win programmatic sales. Let's have a look. Therefore, the vast majority of individuals who purchase XRP from the digital exchange did not invest their money in Ripple at all. Said the programmatic buyers stood in the same shoes as secondary market purchasers who did not know to whom or what they was paying the money, which we just talked about. It may certainly be the case that many programmatic buyers purchase XRP with an expectation of profit, but that did not derive from the expectation of Ripple's effort. So that's the point, is they may have wanted to make money, but they weren't expecting it off the back of someone else doing some work. In this instance, Ripple, particularly because none of the programmatic buyers were aware that they were buying XRP from Ripple. It then actually goes on to say down here that in fact, many programmatic buyers were entirely unaware of Ripple's existence. And I've actually finally highlighted some of this because there's some affidavits here. I think there was like 3,500 affidavits that were sent in with people, obviously Ripple meme boys, XRP meme boys, should I say, who were basically saying, yeah, I bought it. And some were saying, yeah, I knew of Ripple, but others were saying, never heard of Ripple, just YOLO'd into XRP because in 2017 it was doing really well, etc., etc. And for once, the judge actually says, you know what? And we have the evidence here to suggest that people didn't know that Ripple were there. And even if they did know that Ripple were there, they didn't know that they were buying off Ripple. So, fair play to the XRP army there for, helping to, I suppose, win this case or prove a point towards this case. It lacked other factors present in the economic reality of institutional sales, which cut in favor of finding reasonable expectation of profits derived from entrepreneurial or managerial efforts of others. Sorry if I'm reading this a bit fast. I'm just trying to get through it. The sales were not made pursuant to contracts that contained lockup provisions, resale restrictions, indemnification clauses, statements of purpose. So if I bought on Coinbase, I could sell a second later on Coinbase. There was no requirement me to do anything else. I didn't have to submit anything. And then it actually, a bit of a kick in the teeth here, it kind of says, lastly, institutional buyers are sophisticated entities, including hedge funds and investors. It kind of lean towards saying, you know what, as retail buyers, we're just dumb. We have no idea what we're doing. We just chase after money as if it's nothing there. There's no evidence that reasonable programmatic buyer, who is generally less sophisticated as an investor, shared similar understandings and expectations. So thank God we're all a bit thick. Otherwise, we might have had a different outcome here. And therefore, as she says, having considered the economic reality and totality of the circumstances, court concludes that Ripple's programmatic sales of XRP did not constitute an offer and sale of investment contracts. So I mentioned before that we went straight for the third prong of the Howey test. That's kind of important. And it says so in the footnote here, which is why it's useful to hit the footnotes. Because the court finds their records do not establish the third Howey prong of the programmatic sales, the court didn't even bother to determine the first and second was satisfied. So they didn't waste their time on that. Had they have found it the third, they would have gone back and have a look at it. The reason I mention this is if there's an appeal, if this has to go back to the judge and we actually find that, people who did buy on exchanges were sophisticated, they did know what they're doing, and some of them were aware they're buying from Ripple, then the judge has left themselves enough rope to at least go back and have a look at the first and second prongs of the Howey test to determine if there's an opportunity for it to fail there. I'm not saying that it is, but the footnote here just adds that, I suppose, get out of jail free card. Other distributions, so we know what those were, considered other than cash. They don't satisfy the Howey's first prong because it's an investment of money. So straight away, that's a fairly simple one. These were just gifted, so they are not an investment of money. And she goes through all the different cases while that's there. So therefore, when considered the economic reality of that, then can conclude it's an offer and sale of an investment contract. It fails the Howey test. So now Ripple have won 2 out of 3. The last one is not really for Ripple, it's the former founders and owners and CEOs of it. And this one's a quick one here, because the SEC kind of shot themselves in the foot because they were claiming that Larsen and Gerlinghaus did exactly the same as what Ripple did and used programmatic sales. Larsen and Gerlinghaus XRP sales were programmatic sales on various digital asset exchanges through the blind bid and ask process. Well, the judge is automatically going to be able to rule on this, because if Ripple aren't guilty of violating the Securities Act, then neither are Larsen and Gerlinghaus selling privately using exactly the same method. Now, what is interesting here is, that's number 18. So that was going back to over distributions, similar kind of thing. Failed the first Howey prong, so didn't even have to look at the second and third. If that gets reversed, there's an opportunity to have a look at it here. Judge very quickly just says the sale of XRP and digital exchange asset exchanges do not amount to offers and sales of investment contracts. So there's a footnote 19 here. I'm just going to scroll down to read it, because what the defendants were going to use in court is they were going to say, oh, we sold them on foreign exchanges where, you know, they don't even use the Securities Act, so we're safe from that. And the judge has gone, I actually don't need to look at that. That may be true, but I don't need to see that because it doesn't meet the third reason of the Howey test, much similar to point number 2 in this case. So again, potentially they've got that argument up their sleeves if anything were to get appealed. Then we have a look at defendants' due process defences. I think this is an important one which got overlooked by a few people. Defendants each assert a fair notice defence, claiming the SEC violated their due process rights. Due process, I think the Americans pronounce it as. Larson and Garlinghouse also assert as an as-applied vagueness defence based on the same due process principles. What they were saying here is that, you know what, these big regulated authorities have a duty to let us know how they are going to go after us so we can make sure that we don't make that mistake. And it says here, this clarity requires is essential to the protections provided by the Due Process Clause of the Fifth Amendment and requires the invalidation of laws that are impermissibly vague. So that's what they were arguing. But the court, unfortunately, the judge rejects that. So it rejects out of hand and says, you know what? Fair notice and vagueness defence is an institutional sale. So they reject it from that point of view because they only have to look at that point of view because that's the only one the SEC are winning. First, a case law that defines an investment contract provides a person of ordinary intelligence a reasonable opportunity to understand what conduct it covers. So mentioning Howey and a few other things as we'll skip through. Second, the case law articulates sufficiently clear standards to eliminate the risk of arbitrary enforcement. And again, in the Howey case, they cover that. And there's also the test that you can do. Defendants focus on the SEC's failure to issue guidance on digital assets and its inconsistent statements and approaches to regulate the sale of digital assets as an investment contract. But the SEC approach to enforcement, at least as to the institution sales, is consistent with enforcement actions that the agency has brought relating to the sales of other digital assets to buyers pursuant to written contracts and for the purpose of fundraising. Moreover, the law does not require the SEC to warn all potential violators on an individual or industry level. This is actually massively important, and this could be a thorn in the side for crypto's victory, because obviously the Ripple and their CEO and founders are using fair notice. We should have been told, we should have been given clear guidance as to what the law is supposed to be that we're going to break. The judge has now ruled against that and said, no, there's plenty of information there. If you're looking at it from an institutional sale, there is information that you can go on. Why is that important? Well, the SEC is suing Coinbase for security violations. Coinbase were likely going to use the same fair notice argument, and that's already been thrown out in their faces. So now SEC might have a bit of ammunition when they go to that trial or that judgment. I'm speculating there, but that kind of feels like actually that could be a bit of a dampener coming along, and Coinbase may not get out of the woods for a very similar point of view there. Okay, then it just goes to say that it summarizes what we saw at the beginning. So we've got summary judgment is granted for institutional sales and otherwise denied. So basically, SEC win on institutional sales and lose on everything else. And the defendant's summary judgment is granted for the programmatic sales, other distribution, and for the CEO stuff, but denied on institutional sales. So that wraps that up. There is also one other thing that was mentioned and talked about, and that is, again, against Larson and Garlinghouse, and that is aiding and abetting of Ripple's violations. So the SEC again asked for summary judgment on this, and basically to establish if there was any aiding and abetting security violations, they needed to show and prove the existence of a security law violation by the primary party, knowledge of this violation on part of the aider and the abettor, and substantial assistance by the aider and the abettor in the achievement of the primary violation. So that's the first requirement. The court has already held that Ripple's institutional sales constituted the unregistered offer and sale of investment contracts under the violation of Section 5. So we know that's a tick. With the second requirement to show knowledge of Ripple's violations, the SEC must demonstrate Larson's and Girlinghouse's general awareness of their overall role in Ripple's illegal scheme. The SEC must show that Larson and Girlinghouse knew or recklessly disregarded the facts that made Ripple's transactions and schemes illegal under statutory and case law. I'm just skipping bits here, which I don't necessarily... They are all relevant, but for the sake of time. And that Larson and Girlinghouse did not know or recklessly disregard Ripple's Section 5 violation. So they've got to try and prove that. And as to the third one, defendants concede that Larson, as Ripple's CEO prior to 2017, provided substantial assistance, and Girlinghouse, after becoming Ripple's CEO in January 2017, provided additional substantial assistance. However, Larson claims that he did not provide substantial assistance during his time as the executive chairman. Okay. To satisfy the substantial assistance component aiding and abetting, the SEC must show the defendant in some sort of associated himself with the venture, that he participated in it, as in something that he wished to bring about and that he sought by his actions to make succeed. In other words, the defendant must consciously assist the commission of the specific crime. So they may have said that they did provide some assistance, but they've actually got to prove they consciously wanted to do it to break a law or to commit a crime. This is the crux here. The court concludes, therefore, that a reasonable jury could find that, starting in 2017, Larson did not consciously assist in some active way. Accordingly, the SEC's motion for summary judgment in aiding and abetting against Larson and Girlinghouse is denied. So that, a lot of news outlets are saying, is a win for Ripple or for the two CEOs, but that is not what is written there. And that, we need to we don't need to clear it up, but just so I can clear it up for you. Basically, what the judges said there is, I am not going to provide summary judgment on this. We're going to a jury trial. That's what she's saying. So there will still be a trial, because she reckons that the defendants could, a jury is reasonably educated and informed enough to be able to make that decision. And so that's where it should be best settled. So we go through there. So that is a long-hearted win. I mean, not looking at my notes once, of the summary there. So, as we said, we've had one win for the SEC. We've had 3 wins for Ripple. We've had a massive win for XRP, as being classed as another security. We have a we do not know in terms of Larson and Girlinghouse's aiding and abetting. That's going to go to trial. We don't have an understanding of when the trial's going to be, but you can imagine it's probably going to be late 23, early 24. We also don't have a punishment, for want of a better term, for the institutional sales. And so we need to... there'll be some sort of, I don't know if it'll be a trial, but it'll be some sort of hearing that will announce what that's going to be and the amount that's going to be. So that's still unresolved. But there is also a lot of ambiguity within what we've seen there, because the SEC could still appeal this. There could be grounds that they think have been unfairly looked at. So all of these rulings may necessarily be overturned. But the other concern or ambiguity within that is the judge's view on fair notice, which we talked about. It's been rejected in terms of the CEO and the former founders, or the founders. And so if the likes of Coinbase and other exchanges were planning on using that same argument, they also may struggle if they, solely when looking at institutional sales, I should add. Let me just check. Have I got everywhere? That was it. So right at the beginning, I said that XRP, this is great for XRP. Let's not kid ourselves here. I think it's a really positive step for them, and you can see why the Moonboy Army are going forward. Yes, Ripple may have to pay a fine, but as a token holders for XRP, I think that is a good step. There's already people talking about banks being lined up to use the Ripple, the ledger, and therefore XRP and all that kind of stuff. We'll see whether or not that happens. Doesn't necessarily matter. But I mentioned that they were rather unique, and actually these findings may not provide any sort of path for any other cryptocurrency that is currently being deemed as a security. And we know from the 66 other cryptocurrencies that have been listed now by the SEC as securities, 2 of the biggest gripes that the SEC have, and they currently have, is that you can stake the token. Well, you can't stake XRP, so that doesn't fly with that. And that it had an ICO. Well, again, XRP didn't have an ICO. So a lot of these other tokens, particularly proof of stake tokens, are stakeable and generally had some form of an ICO or fundraise. And so whilst everyone's getting rather excited about where this could take us in terms of the future, I think there's still a lot of questions to be answered. It's great that we have some sort of framework that we can work towards and probably try and analyze. It's great that we now know that the Howey test is all that you need to determine if a crypto is a security. And it's very positive for XRP that they are one of now only 2 cryptocurrencies that have been cleared and been confirmed that they are not securities. So, this is just all moving in another positive step forward. I think there's still a lot to come out from this. Now, as I understand it, reading news articles, there's no urgency from the SEC that they are going to launch appeal. I think the appeal can start from today. I think it was, 7 days after the ruling come out. So maybe we might see one, but it could be months. I don't know. I don't even know what the statute of limitation on appeals are, how long it is. This has taken 3 years, 2.5, 3 years to conclude itself. So we may have quite a bit of a wait there on that. But anyway, that's kind of a very long-winded run through of that. So apologies there. I think it is important though. We've talked about the XRP, the Ripple case for years now. And we finally got some answers towards that. I asked in the poll, where do we think the ruling is? It a positive step? Personally, I think it is a positive step. I think there is at least some direction now, some framework in which cryptocurrencies, altcoins, particularly ones that have been labeled as securities, can now work towards. However, the judge has left openings within their ruling because they've only assessed what was in front of them. And so some of the holes that weren't able to be filled by the parameters in which XRP was set up could still be, I don't want to use the word exploited, but could still be used as trip ropes, if you will, for those altcoins. But I think it's just great that we finally got that. Once it came, I expected the pump. The fact that the market reversed afterwards and we've been stagnant still is probably just shows you that we're probably just a bit too toppy as it is right now. And maybe people are just getting a bit hesitant, a bit nervous. But I think in terms of just laying the precedent, not thinking about price action, but just thinking about where this market and this industry can necessarily go. This is a great framework. And I'm sure we'll be referring back to this quite a lot over the months, years, maybe even decades to come. Let's have a look. I missed probably loads of questions. Since you believe it's Bitcoin's £40, what are you putting on Bitcoin Reach? I don't really, in terms of price action, it's difficult to say. People like to draw the little curves and say it could get to those. I think we'll at least see all-times high again. And if we get to 100K, I think that's going to be great. People, will draw a line and tell you it's going to be able to get to 360,000. Then you take off the logarithmic chart and it only looks to be getting to 125,000. So I honestly don't know. We'll know when we're getting to the top, because wherever we're at, and when people suddenly start thinking we're going to get 5 times of that price in a matter of months, it's probably when we're going to be getting to the top. But yeah, I think 100K is definitely reasonable in terms of where we're going. Also, it depends on what the Americans do in terms of their dollar. And as Bijan said, if there's a recession, but a bad recession is probably the halving might not do anything. I think, I believe the halving will always do something. We had that really tough time in 2018, 2019. I think the markets dumped right around Christmas. They're not just crypto markets. And yet, tough position. 2020, the world was shut down. I mean, we were just starting to print money, but we actually didn't know if we were printing money and how long that was going to last for. We made it. I think just scarcity will drive the price naturally up. Total free still looks bearish. I said last week, me and you, and I think it's kind of in a position where it bounces. If it loses that level, then I agree it's bearish. When Lambo, Harry, please tell me. That'd be lovely. Well, did you Moon Lambo? He's a real big XRP fan. He's been fighting the case for a while, so he must be loving this now, because I'm sure he has millions invested within it. He did a lot of YouTube videos. He's a faceless one, but he got very emotional actually about it. Obviously shows what it means to some people. Adam, in terms of other coins, if they are classed as security, I can't really see it being a major issue. Yes, they may short-term dump. However, it's simple reality. They will need to register and sort of go forward. So it's how they're teamed. Like if a bit like with XRP, it was classed for institutional sales that Ripple did break security violations, then yes, the likes of, just trying to pull one out of the air that I know is a proof of stake, that I know Cardano, which was around at that time. Did it meet the ICO criteria, and if so, what's it actually mean for the token rather than ADA rather than Cardano, and how big is the fine going to be? I think that's been a question that's been on my mind for months anyway. So I do agree with that. Yeah, it may shake something up initially. They'll probably recover, and if as long as they're big enough to cover the fine, then I think go forward. What it may hamper now is new projects coming around. So that innovation, certainly within the United States, how we can get new projects around, how we can get it funded, how we can get that, it growing. And that may be a lot more restrictive now. But again, we just need to wait and see. Sentiment on Crypto Discord is that XRP as a tech has a future, but the token doesn't. I don't necessarily really know enough about sort of the tokenomics and everything else. Maybe it's one we need to add to the list. I had another news article on this, but I can't really be bothered to read it. Ripple court decision resides on shaky grounds. Kind of a few things that I covered in there. Okay, I need a drink of water, and then we'll move on to some of the questions. So just thanks for all of these questions, everybody. Alex has put, "Hey Harry, I've noticed I have an ape NFT on my Binance spot holdings. Should I be concerned and worried, as I have never purchased an NFT before? It's affecting my spot holding BTC value as a result." This is not a new thing. If you ever have a wallet that's connected to OpenSea, or just generally something called MetaMask, you may come across tokens that you've never heard of, that you suddenly have hundreds of thousands of them. And a lot of it can be a scam. You suddenly try and sort of move those. I don't know, there's some malware within there which covers your keystrokes or whatever it may be. Probably not as simple as that, but a lot of them are generally scams. In terms of NFTs and in your spot holdings, it's something that I've not necessarily come across, but something in my Binance account, so don't worry. I'm not sharing anything too scary here. But this SGB Songbird, I don't know if any of you else have seen this. This has now been in my account for the best part of, 18 months, maybe 2 years. And you see, I can't do anything but withdraw. I never put it in there. I don't even know what it is. It's only worth $3. But I can't really move it. I wouldn't even know where to withdraw it to. So I've just ended up having to leave it in there. I mean, my advice would be with your NFT is just do not touch it. Just, I don't understand how it's sitting in your spot holdings, because this is my Binance NFT section. And as you can see here, apparently I have a Binance KYC mystery box. Well, I think I remember this now, but I didn't buy it. It was just when I did the KYC, they've sent me something. But you say I cannot list it, I can't sell it. This is just an NFT that I particularly have, as ugly as it is. Didn't even know it was there till I saw your question. I decided to have a look at it. I got excited then, thinking that was my balance, 2,700. I was like, what's happened there? I have to sell that. So if you generally haven't done anything with it, I'd just leave it. In terms of, I've had an Ape NFT. So is Ape NFT just a token? It just happens to have that name. Let's have a look. There you go. Yeah. So that's it. It's not actually an NFT. This is a token that's just been deposited within there. So there we go. So a bit like with my Songbird, there's nothing I can do with it. I've just left it. I would just leave it. I have no idea what it is. Just leave it there. If it has any value, maybe you can try and withdraw and sell it somewhere. But for me, then you've got the thing of the tax issue as well, because you have to kind of declare that. When it comes around to these, I mean, I don't touch it, so there's no taxable event for me, so I don't have to even deal with it. I can just load my API and it just sits there. But I've not had Ape NFT. So I thought it was an actual NFT in here. But yeah, I mean, Adam, since you're on the call, how much is it worth, your Ape NFT they gave you? Whilst he's answering that, I'll look at it. Chris has asked a couple of questions on charts. I'll come back to both of that, or all 5 of those. James has put, could we cover ideal crypto portfolios to buy into for the upcoming bull run to hodl? Not sure if this has already been covered, not looking for the exact investment advice, but how to suppose how to diversify. Diversive is what you put, but okay. Crypto portfolio to spread risk would be good to include some examples if possible. So back in the day, for RT, sorry, Adam's put he had over 800,000 worth 28 cents. Yes, probably not worth it then. There was a thing called the Kryptonian portfolio, which Simon had kind of built, and it was based on having a look at different sectors and picking one or two of the most prominent ones in each of those sectors and building a portfolio of 30 plus cryptos, which is something you could certainly have a look at doing. There's videos on YouTube on it. I think there's even videos on Discord, or certainly in the course. But all he essentially does is he goes onto I use this Masari website, which is like CoinMarketCap, but it gives you a sector, and then you can filter the sector. So you'll have everything lined up, and you can just go through and go, right, okay, what are my biggest currencies? What are my biggest smart contract platforms? Now, that will take you so far. I think that'll give you a fairly basic risk adverse portfolio. The problem with that is if you're picking the top two, they could be quite old. They could have already made significant amount of movement. So then you got to understand, well, what is it you're trying to do with your portfolio in the first place? Because if you're trying to expand your portfolio and get as much bang for your buck as you possibly can, then that might not be the best way to do it. Because if you look at the likes of smart contract platforms, we've got Ethereum, BNB, Cardano, and Solana. It's 4 of the top 10 are up there. So potentially their moves, given on what their current market cap is, are going to be not as great as if you could find something that it's got a bigger risk to it, but has a lower market cap, better tokenomics for you to find that growth. So unfortunately, that's just something you're going to have to necessarily build out. I've done a couple of videos though on what I do, and I'm not going to necessarily run through it now. But if you go to Vimo or go to the thing, there's one I did on the Avengers call on the 28th of February, which was a 3-pot portfolio. And I spent, 20 minutes or so going through how I build 3 pots very quickly. Pot 1 is effectively Bitcoin and Ethereum. They're my, slow movers. Pot 2 is my blue chip, middle of the range altcoins that I like. And then pot 3 is more my degen, higher risk but lower percentage putting into each of them plays, and maybe also some derivatives trading or just trading moves. And the idea would be to move profits from pot 3 either straight to pot 1 or moving it into pot 2, finding another medium blue chip altcoin, investing as that gets the growth, just slowly taking profits and converting that into pot 1. And the idea being that by the end of it, you've been able to grow your Bitcoin/Ethereum holdings. Then you can either keep that because you're a Bitcoin maxis and you want fit to die, or you can take some profit that way. That's how I do it. I probably give some examples of ones that I go through, but as I say, pot 1 for me, I'll give you a breakdown. Let's have a look. If I open this is my portfolio here. The long-term holds BTC, Ethereum, and DOT. So they're probably like my pot 1. I think DOT kind of is pot 2. I'm not married to it. I just think it'll do very well, and it's a large holding for me. The medium ones are here. So these are ones that I'm putting, anywhere from 5 to 10% in. We got the likes of Bifrost, we got Multiverse X, we got Glimmer, Link, Matic, Near, OKB. That's going to be my exchange token of choice, Quant, and Rose. And then I've got what I class my shitcoins, so probably my my pot 3. Now, these are ones that, these are either ones I've done in the past or ones that I'm interested in that I don't necessarily have any look towards. So although ADA may not be a shitcoin in terms of how I'm viewing it, if it ever got down to that 26 to 20 cents level, I'd buy a little bit. And then when it got up, I'd just be selling it. I don't care about it going all the way to the top. But there, even BNB, it's not a shit coin, but it's not one that I'm treating in terms of my mentality of how long I want to hold it for. Doge, Gas, GMX, CAS, those kind of things where I'm just looking to see if I can get as big a bang for my buck. So that's, an example, I suppose, of what would be in the 3 pots. This shitcoin isn't really accurate. Medium and long term are fairly accurate of where I currently stand. But I hope that helps. Let's have a look what we got here. Adam's put, can we have a quick look at CAS again? It seems that it's divided over Bitcoins. Yeah, we're going to have a look at that. Chris has asked me to have a look at Casper, so we'll cover that. Do you think it's causing the strength at this stage? Not in, just curious. Okay, yeah, we can cover that. And then Sean's put, I know you're not sold on CAS. I feel like that's all I talk about is CAS. It's not that I'm not sold on it. Like, I understand the technology. I understand, its transactional speeds, and I like the founder. Don't get me wrong. It doesn't have a big enough use case for me for it to be anything more than a speculative play. And I'm quite happy to wait on a speculative play to see if it drops further. And if it doesn't, I'll just find something else. There's plenty of other cryptos out there that could easily do a 10, 20, 50x, It's not necessarily the problem. Where I have, the issue is because I don't find the use case at this moment in time. Yeah, I might miss the opportunity and I'll come back in 10 months time and I'll be like, damn, I should have got in earlier. But now it's got a proven use case. The risk to reward's better. I'm happy to put a bit more of my pot into it. So I am still waiting. So it's not that I'm not sold on it. It's just I'm not sold on allocating a significant amount of my pot. And I can't either because, I'm 60 odd % in the market at the moment. And I want to keep. Sorry, I should have said in my pot system, I'll keep about 10% back for new projects that come around. And they'll be, they may get straight to the mid pot, but generally they'll be in the shit term pot. Anyway, can you go over where to buy it, how to buy it, and where to store it? I have a ledger at the moment. I can't get hold of a Trezor for a couple of months due to living overseas. So so many people in Discord recently were talking about Trezor being able to hold Casper. So I don't know if Simon's put that in a video, but let's we'll tackle that one first. So you can go onto Trezor, you can go to coins, and you can see what it holds. You can kind of see Bitcoin, tick, tick, tick. Yep, you can do all three. You can see some of these. It doesn't hold them. Like, you can't store Polkadot on Trezor. Even though the name's there, you can't store it. And so if I type in Casper's the same. The name's there, but you can't store it on Trezor. That doesn't mean it won't happen in the future. But as it stands at the moment, you can't store Casper on any hardware wallet that I am aware of. So to answer your question about where you can store it, you need to go to the Casper website and you go to the resources page, and then there are these wallets. So you've got a web and a mobile wallet, you've got a desktop wallet, and you've got a command line wallet. I don't really know what any of these are. If I were to choose, I'd probably go for either the web wallet or the desktop wallet. Probably the web wallet, because desktop is just going to be restricted to my desktop. If I need to do something while I was out and about on either my laptop or my mobile, then I wouldn't have access to it. But if you click on that, it's just going to take you to be able to create a new wallet. And then if I put in a password and confirmed it and hit next, I'm sure I'd be given a seed phrase to remember. And then that's my wallet created. Give me a public key, and then off you go. So creating a wallet is fairly simple. And you just got to remember, from a security point of view, make that password pretty darn strong, because it's just a web wallet. It's not backed by any hardware wallet device or anything like that. You can use some of these other things down here to perhaps provide some, but I haven't gone into that, so I don't necessarily know where that sits. Now, in terms of how and where to buy it, here are your options. And, the two safest places to buy it, in my opinion, if you're based in the UK, would either be KuCoin or MEXC. Now, MEXC has the majority of the volume. Actually, TXBit has the majority of the volume. Never even heard of it. But then you got MEXC and then Coin. I mean, I've heard of Gate.io. I just don't really like it. I use Coinbase now. I'm fairly happy with that MEXC. And you can just go on there and you can see that it's a CAS USDT pair. So that's all you'd need to do. Once you then bought it off the exchange, so I'd set your wallet up first, buy it on the exchange, and then immediately send it from that exchange to your web wallet. In terms of how you go about doing that and what you're doing in it, I don't have a MEXC account, so I can't necessarily show you. What I can put you in the direction of is, don't switch that. If you go into general chat, you go back to the 13th of this month. Someone asks about, have you ever recorded buying CAS? Be good to see it. I think this is like the first time that Simon buys it. I mean, if you watch the video, I think you can go through it. If you can't remember that, if you just go to general chit chat and click on pin notices, it's actually pinned within there. So that should probably show you how you can go about buying it. I think Simon does buy it on MEXC, so that would help. And I've never used it, so I don't know what the UI is like, but yeah. Okay. I think that's kind of all of those questions. Oh, I've still got these bloody research tokens today. Right, okay. Right, let's do the research token. So I was asked last week to talk about a couple of research tokens. One of them was hex.com and the other one was PulseChain. Now, normally I said I won't do two tokens at the same time, but actually these two are very heavily intertwined. They're set up by the same person and they've got pretty much the same following and same detractors going around. So it made sense. I would go through with this. I'm going to be honest though, like, bit of, pulling the curtains back behind the scenes. So when I do these, I kind of like it. I don't necessarily have a script word for word that I'm going to go through. I have some notes similar to what I've kind of always show, which kind of goes through what hex is and all that kind of stuff. But in my head, I kind of have a bit of a script about how I want to go through things, like kind of order how I'm going to set up the web pages so I can flow from one conversation to the next. And hopefully it feels a little bit slicker. Trust me, I can talk the ass end off a dead dog if I'm not controlled. But I found that really difficult to do here, because something I want to say about it, which would naturally come towards the end, I feel like obliged to say it first. And when I say it, it's just going to change the entire connotation of what it is I'm going to talk about. But I think it's only fair that I just come out and say it, and then we go from there. So I don't think I have ever researched a project, which I have heard of Hex, I have heard of Richard Hart, I have heard of Pulse Change, but I didn't know anything about them. I've just heard of them. What I'm saying is, I don't think I've ever researched a token and then made a decision as quickly as I have when researching Hex. And the reality of this is, I personally believe that this is one of the dodgiest projects I have ever read about. I have such reservations as to what Hex is doing, what it's trying to achieve, how it's doing that. And then when I talk about Pulse Chain as well, exactly the same. The individual, Richard Hart, is in charge. I mean, he is a convicted, maybe not be the right word, but a prosecuted scammer. He has a history of scamming people in the past. He was chased out of Panama through exploitation claims. He talks about these sort of Ponzi scheme-esque, but they're genuine, but they're using the mentality of Ponzi scheme to drive it all in. And it just feels like the projects themselves are not great. So I'm just going to say this off the bat. Normally I wait till at least halfway through. I do not support this. I personally would never touch this. If you really do want to get into Hex and Pulse Chain, know what you get into. Do far more research than I'm going to go through, because I'll be honest with you, I lost the taste of researching it because the information that was available was so poor, and I didn't like the project. I couldn't be bothered looking into it. I think I've done enough to be able to explain what it is attempting to do, and some of the concerns I have and why I have those concerns. But for me, I will absolutely not be investing in this. I want to put that straight out the top, just so there's no confusion. I'm sure I'm going to say it a few times going through. But what is Hex? Hex.com. Well, you'd be right in thinking, I'm going to go to Hex.com to find out what it actually is. And when you get on that homepage, normally there's something that's going to explain what it is. You cannot find what Hex.com is on the first page. As a matter of fact, I don't normally talk about how a website looks as the first thing. I normally try and go into what it is, and then we talk about that. But actually, since this is what we're presented with, I feel like we are obliged to talk about this. So I don't like the website. I think it speaks to me like I'm a child, and it provides such little, it's like arguing with a child, a stubborn child at that, in that you try and put a reasoned argument or a reasoned question to it, and you just get a generic, doesn't even scratch the surface response back. And that's exactly what this is doing. So straight away, 38% returns APY, that's what it's saying. Kind of should be getting alarm bells at the moment. But then now look at it straight away. It just goes in. Before I even know what it is, it's already boasting about how good it is. 3.5 years of flawless operations. No middleman, no minimums. It feels like someone's selling me something here straight away. And my back's already up. Mex Mining doesn't require any hardware or electricity. Well, there's loads of things like that. It's definitely going to require electricity, because I'm going to need to do it from my computer or my phone, and that's going to need charging. And then look at this. This is the one that wound me up. 10,000 Hex used to cost 57 cents. Now it's $91. So what? What do they do? Update this every day? Anyway, and then this is it. The Hex.com diamond. Why is this important enough to be the first thing that I really scrolled down? I mean, it drew my attention. But allegedly, Richard Hart bought a diamond, the largest cut black diamond ever. It's called the Enigma. And I think he did buy it. I mean, it was bought anonymously, but he came on to say that he's bought it. So I don't have any reason to doubt it. My point is, why put it on your bloody website? There's 555 carats, so it's a pretty decent one. And he's like, yeah, I'm going to rename this the Hex.com diamond. I mean, like, one, who cares? And two, are you a child? Why rename a diamond that? What value of your clients who have bought Hex token get from you calling that the Hex.com diamond. But it doesn't stop there, though, because the next thing he does is he tells me that he sponsored a NASCAR in 2022. I mean, I'd rather know what the product is before I knew that. We're finally getting somewhere to what it is. The future of finance is here. So you can mine Hex by running some code on your computer or phone once and waiting anywhere from 1 to 5,555 days. You choose how long. I mean, it's, again, that's the first narrative we've got on what it is, but it isn't what it is. It just tells me, I can run some code. Not what code, just some code. Don't worry about what it is, guys. Just run some code. You earn larger rewards based on how long you commit to wait. That's not great either, is it? You stay longer and you'll get a bit more money out of it. You don't want to miss those bags at the end. Try and stay in. I mean, 5,555 days, by the way, in case you were trying to work it out on your fingers and toes, is 15 years. 15 years you can lock it up for. We'll talk about lockups a little bit later on. Longer pays better. I mean, that punchline, if you're going to do it, have it as just, on its own, not lost in the text. The APY for Hex mining on average length is 38%. Well, that depends on when you put it in there. Imagine minting Hex rewards while the price of Hex is going up. You win twice. I mean, we're really selling it here, and it just feels immediately scammy. Totally decentralized, though. You mint your own rewards, and there's no middleman in Hex. We need to be sure there's no middleman. He's mentioned it twice on the front page now, so we're okay. And there's a bit of data here, and look at this chart. I mean, at first glance, actually it looks like bloody hell. In the 3 years or whatever, it's actually held its price quite well. But this is like a logarithmic chart like you've never seen before. That's 1 cent, that's 10 cents, that's $1. The gaps there are astronomical. So it looks like it held it, but it went from 45 cents. It actually went hell of a lot higher than that. It went to like 80, I think, down to it's less than a cent at the moment. So going back to his comment there of imagine minting Hex rewards while the price of Hex is going up, you win twice. Problem is, it isn't going up. So I ain't winning twice. I'm losing twice. But I digress. But I just don't like the way the website is set out. It winds me up. It's all about very artificial, flimsy, unanswered questions that I didn't even want asking, and never mind answering. The first box here, Hex is changing lives. Delayed gratification is the key to success in personal development. Is it? Is that what it is? I'm not sure it is. Depends what kind of gratification you're looking for. Incredible performances. Removes middleman again. He's told me it's removed it twice now. The share price went up 16,000x because there's a thing called T-shares. And anyway, so yeah. So I like it, but let's see what it actually is. How does it work? So we click on this and we get our first clue as to what it is, but it's not that well explained. If you don't know what one of these is in a banking world, you're not going to know what it is in a CDU. But again, how does it work? So CDs. So I would have thought, instead of starting with CDs, start with what the long version is and then abbreviate afterwards. But anyway, CDs, known as certificate of deposits or time deposits, are worth trillions of dollars in the banking system. We missed that bit. CDs are worth more than gold, credit card companies, and cash. CDs pay higher interest than savings account, requiring money to be deposited for a fixed amount of time. So this is something that is used in the banking sector. And he's saying, well, you know what? I'm going to bring it into the crypto sector because we can do a very similar process. We can just, certificate of your deposit, you put it down there. The longer you keep it there, we're going to give you some token of some sort. And then that's just going to accumulate over time using game theory. And then, when you go to take it out, you're going to be sitting on a pretty bag. But then it starts slagging off the bags. And don't get me wrong, the banks don't exactly pay a very decent APY. We know that. They pay pitifully low interest. New money is printed all the time, making yours less valuable, says the guy that's got an inflation rate on his token. But anyway, Hex monetizes the time value of money in a totally new and better way. It takes the concept of CDs to the next level. Hex replaces inefficient currencies, banks, and payment networks to verifiably secure peer-to-peer technology. I'm sorry that I had to read that to you, but that is all you get on what this thing is. So, hey, there isn't a white paper. This is what we've got. But then, if you want to know more, thank God we've got all of these here. The price of Hex appreciates faster than anything else. Does it? Faster than anything else. So the first thing it tells you about is, again, just bigging up how good it is. What does this sound like to you? Because I'll tell you what it sounds like to me. BitConnect! It does. It feels like the 2021 version of BitConnect. Just getting on that stage here and get everyone pumped. Yeah, I am going to take these sound bites. I'm going down the pub and I'm going to sell it to my mates and they're going to buy it. That's what it feels like. Life-changing wealth creation. I want to know what it does. I'm on the how it works section, not how it makes me money. Yep. Anyway, you can click through all of these. Oh, crap. It's got a security section. It's got why it's special. It's pre-viral, apparently. Speculative stickiness. I mean, just whoever created this, it's either a meme and it's just meant to infuriate people like me, or, you know, they're just an utter idiot. And then Hex is a Nobel Prize-worthy economics breakthrough. Now, I'm not intelligent enough, but I thought I'm going to click on this scientific paper. Look at this. This, I mean, you got to get it down. Some of the equations they start throwing out here. I mean, I don't even know if they're talking about Hex, to be honest. This is their one little thing to go, look, guys, I told you we were intelligent. Come and have a look at this. I'm not going to waste your time on that. But anyway, I have found an article about what it was. Sadly, the article is titled Crypto Scam or Great Investment. So, created in 2019, Richard Hart, we're going to talk about him a little bit later on. Hex is the first high-interest blockchain certificate of deposit, essentially the crypto's version of a bank fixed deposit. Basically, users can stake Hex token for a share of a new Hex coin issuance, which comes from its annual inflation rate. Launched in 2019, Hex airdropped free Hex to Bitcoin holders who could then claim Hex through the MetaMask wallet. Hex uses the Ethereum blockchain as a transactional layer for sending and receiving Hex tokens and interacting with Hex Smart Chain with its consensus coding and staking mechanism contained within the Hex smart contract itself. Whilst I don't dispute what Bybit is saying, is the Bybit article. Where the hell did they find this information? Because it isn't on the website. So maybe they did a video on it when it came out. How it works. So it utilizes a proof of weight protocol. Do you remember all those ones back in? There was like proof of marketing. There was one beginning with H. I can't remember what it was, like proof of hype or something. Everyone just came out with these crap ones in the last bull run, and this is no different. Proof of weight protocol, which allows Hex holders to earn interest on their investments by staking their token in the Hex smart contract. And although it is an ERC20 token, it's referred to as a coin on the company's website. Okay. Do you think that's because they've realized that they marketed it the wrong way and they didn't know the difference between a coin and a token? I'm not sure. It talks about the lowest inflation rate you can get is 3.69%. So that's effectively, if all 100% of all the tokens in circulating supply applied to that formula that I didn't understand, the inflation, the APY you would get would be 3.69%. Now, in theory, it's impossible to get it down that low because no one's going to stake 100% of it. When we look at it at the moment, there's some significant fines if you fall either side of your staking parameters, which would then have to be covered and gifted elsewhere. So inflation only occurs when a Hex coin is minted, and Hex is only minted when the staking period ends. Okay, I'm just going to skip some of this. So what you can do, you can stake from 1 day up to 15 years. And as it says here, it's like a little graph of sort of how you can do. So if you staked 150,000 by 5 years, it'd be worth 200k. That can't be right. Because it goes down there. I actually don't know what this chart is trying to show me. I should have researched it better. Price. I mean, so here's the price prediction. I did get up to around 50%. You've seen it sort of dropping down. This is where it gets into it. In 2024, you could see it around 15 cents. Bollocks. 60 cents by 2030. We'll talk about what that would mean in terms of market cap. Is it a scam? Hex is not a scam. And I want to just be clear on that. It's so not a scam that they dedicated an entire page of their website to saying it's not a scam. So is it a Ponzi scheme? And then when you actually have a look at it, yeah, it doesn't actually say how it's not a Ponzi scheme or anything. It just gives you the most generic answer you could possibly ask for. Is it illegal? I mean, why have a page that has a project on a website that has a page on if or not it's a scam? It claims it's better than Bitcoin as well. So just out there. Anyway, so I'm going to go back to my notes. I'm going to try and talk through what it is. So creating certificate of deposits, but for crypto. Let's have a look. Effectively allows you the opportunity to mint and stake your hex for a locked period to earn shares, which can then be redeemed at the end of the term to make it money. So you, as I said, you can choose how long you want to lock it up for, whether it be 1 day, but you're not going to get much returns, to 15 years. The longer you lock it up, the better rewards. Kind of sounding a bit Ponzi-like to me. It says it averages 38% APY, but that's only if you hold it, I think, for a minimum of like 5 years or something. So just be careful on that one. What is interesting, though, and this is the problem, is when you lock up your hex, I can't find anything that suggests what they actually do with it. You know, like, at least if you were to do this for a bank, they'd try and invest it in some way to actually justify why you're getting those returns. It appears to me that hex are just holding on to this, or siphoning it off, should we say. And so you've got to ask, well, what on earth is the point of it? You know, how are they justifying the returns that they are if they're not actually doing anything with the funds? It's got to be because they're relying on other people coming in behind so that the people in front can use them as exit liquidity. Now, if that doesn't spell Ponzi, I don't know what does. I didn't even bother with the tokenomics section because I'm not interested. You can check out the tokenomics yourself. I will come back to that page. I am a bit angry, you're right. There isn't a white paper. The team, Richard Hart, we're going to talk about in a second. There wasn't a roadmap for what they're doing. It is now live. And we're going to talk about Pulse Chain in a moment. So although this is on Ethereum network at the moment, I believe it is moving over to Pulse Chain. What I will say about the socials, though, is there is a huge following for Hex. It's just divided. You know, you've heard of Hex and you either fall on one side of the camp or the other. You are in the Hex army and you love it, and this Richard Hart cannot be wrong. Or you know it's a scam, you hate Richard Hart, and you can't believe people are stupid enough to fall into it. There's no in between I can find. Not loving that. So drawbacks, poor information. It's got a dodgy owner I'm going to go through. The website's truly shockingly bad. It rather focuses on how good it looks and how funny it can be rather than what they're doing. You can't buy it on a centralized exchange anymore. You can only buy it on Uniswap. Any place. That's going to change. Actually, because oh no, you can on BitGet. Apologies, I thought I read somewhere you couldn't, but apologies, you can. But when we talk about Pulse Chain, we'll talk about why they're doing it somewhere else. It requires long lockup periods to be financially viable, and it needs game theory to work. Unfortunately, though, there is an opportunity for you if you want to end your lockup period. You can, however. If you've served less than 50% of the time you've locked up, there is significant fines in inverted commas for you to unlock. And there is an equation of how it's done on percentage amount, the amount of days you've got remaining, and beyond the 90-day period. Doesn't necessarily matter. But actually, there is a way, in theory, if you had a long enough lockup period and you wanted to pull out so far early enough, that you would not only lose all of your stake and rewards, but you'd lose the entire amount that you invested. Because that's how the punishment works. And these late fees are effectively split 50-50. So if you do pull out and you lose half your hex, some of it goes to some sort of arbitrary fund, sure, Richard Hart's back pocket, and the others goes back to Beaver's stake and rewards later on. So yeah, I can't really go into tokenomics any better than that because there isn't a white paper for me to actually research it. And I couldn't be bothered watching countless videos necessarily on this. Pulse Chain's no better. This is the website. This is the first page. This is the only page of Pulse Chain. It has had its mainnet now and it has launched. But what the hell is Pulse Chain and why did it come about? Well, when this was on Ethereum, it was subject to Ethereum gas fees. And during the hype leading up into 2021, when, to be fair, Hex was doing well because people were, reaping the benefits of it, people were paying incredibly high gas fees to transact on Uniswap. So Richard Hart, he'd already been talking about bringing out Pulse Chain. This has been a long-standing joke for years. Since 2019, he was talking about Pulse Chain. He's finally got around to launching it. The idea is to, one, increase Ethereum's value. So Ethereum fees will be lowered by sharing the load. Sorry, what I should have said is Pulse Chain is going to be, or is, a hard fork of Ethereum. So what they've done is they've just decided, right, at that stage there, we are just going in a completely different direction. But anything that you held on the Ethereum network, they just copied. So, it got given a different name, but whatever crypto you necessarily had, you now have that on the Pulse Chain network as well. And this is, you know, one of the biggest problems for me, because, you know, all aside, you know, a lot of people say that a lot of cryptos are made out of thin air. At least if I had some Chainlink, and I'm not saying that Chainlink's been moved across, what I'm saying is, if it has some Chainlink has a treasury, it has some funds allegedly behind it, which give the value of the tokens I held some sort of value. Well, this is just on a carbon copy printed out of thin air. It's got nothing, literally nothing backing those copies. But we are where we are with that. So enriches Ethereum users, Pulse Chain will re-enable price out use cases. Instead of launching empty, Pulse Chain brings Ethereum system state and ERC20. This rewards holders and founders with Ethereum-based projects, because you get the tokens. The launch of Pulse Chain is the largest airdrop in history. Thousands of Ethereum-based tokens and NFTs receive free Pulse Chain versions. That's the carbon copies. The new gold rush containing the value discovery of thousands of tokens and NFTs on Pulse Chains. I don't know where the value is, but that's where it is. You can just set it up. You can do it on MetaMask. There's your RPC details to launch it up. Removes promotion by replacing proof of work. Well, Ethereum's proof of stake now, but anyway, yeah, still going on that. Improves the game theory because of the issuance of Pulse, and empowers Pulse Chain holders. I'm not even going to bother justifying the rest of that. So effectively, Pulse Chain is a fork, as we said, from the Ethereum network, and all of these dApps that were built off Ethereum can now be built off Pulse Chain. I wanted to scroll down here because it talks about, is it PulseX? Yeah, PulseX is going to be the Uniswap, if you're the DEX of the Pulse Chain network. So yeah, there it is. Pulse Chain. PulseX will be the fork of Uniswap. So just going through that process, and that's where the marketplace where you can buy it all from, solving the congestion that it says about. Some people believe it to be a scam. Biggest criticism of Pulse and PulseX is they're directly connected to Hex, a controversial token that's performed well in terms of price, but with questionable fundamentals. You think back to our days in time and everything else. According to Richard Hart, Hex aims to be blockchain's native deposit, certificate deposit. I'm actually trying to skim this. I was hoping it talks about Pulse. It doesn't. Okay. Right, let's talk about Richard Hart. This is the guy. He even looks like a clown, but that's where he is. I just did a Google search. Is Richard Hart a scammer? There were pages on why he's potentially a scammer. Won't go through those. Did a YouTube search. Is Hex a scam? There's a lot about Hex in there. So if you're interested in it, have a look at those. There's an article here. This is dated back to 2002. Where Richard Hart, he was going by a different name, Richard Schweiler, I don't know how you pronounce that, was sued or fined or prosecuted for spamming, and he broke anti-spam laws, so we know he's a spammer. There's articles here which talk about screenshots from 2017 expose Richard Scammer as the Spam King. He's investigated by authorities in Panama for theft and extortion. Wasn't charged though. He's had multiple aliases, and yeah. I mean, of course, I'm deep in Reddit. There's articles all over the place about Hex being a scam, exit scams, Pulse Chain being a scam. The reason I do want to have a look at this, because I think this is another scary thing. The market cap. It's 1.6 billion. 1.6 billion. Yet it's at 207 on CoinMarketCap. And that didn't sit right with me. That was like CAS, if you remember. We couldn't understand why it was so low. This is such a shitty, scammy project that not even CoinMarketCap wants to promote it. Because if CoinMarketCap did what it's supposed to do and order these in number order of the size of their market cap, this would actually be in the 30s. If we have a look, scroll down. So 32 is 1.8, 33 is 1.7, 34, 1.6. So we should be here. But they want this thing on page 3 so people don't stumble across it and make the mistake. I don't think that is a mistake. I think that's deliberately done. Here it is. Well, I finally got the value of the tokenomics. You're going to have to help me here. So we've got 3, 6, 9. So what's that? 588 billion tokens at the moment. It's got a fully diluted market cap of 5.4 billion on this. And there's 330,000 suckers that actually have it. But the scariest thing is we have to use this page here. Uniswap. So go back to here. It's got a daily volume of, on Ethereum, the biggest one, 47%, 524,000. Let's just say I have $524,000 worth of Hex. Let's do some quick maths here. I'll do. One more zero. Okay. So, I don't know how many that is. 5.6 million Hex token. Yeah, 530,000. But look, it will only give me, there's no liquidity. It'll only give me, well, give me a 20% haircut is what it's going to give me. I'd only get filled 420 or 430,000. I'm losing 100 grand. Yeah. And then what you're thinking, well, why on earth are you putting these figures in, Harry? That's just utterly ludicrous. But there's a reason why, and I'll show you in a moment. Look, if I were to put $5.3 million worth of Hex, I was trying to sell that, I would take an 88% haircut. That's how much the liquidity there. So there's no liquidity here. And if they had the liquidity on the market, the price would be dumping even further. So they have to restrict the amount of liquidity. You can't sell this. If you could sell it, the price wouldn't be what it is. It's not going to stand the test of time. Not that it's going to stand the test of time anyway. But why am I bothered about that? If we go back to Etherscan, so look, I'm in holders here. So we've got PulseX. I mean, they've got $2.3 billion of it. Right? And then this one wallet has nearly $1 billion. If they decide to sell it, we are screwed, but we know liquidity there. So people got 24 million, 18 million, 9, 8. And you're thinking, yeah, Harry, these are all exchanges. We'll stop wind your neck at you were moaning. Let's get down here. See how many wallets are in the millions. We're 1.8 million. Scroll down, we're at 50, we're at 1.2 million. Next page. Scroll down. We're still at 1.2 million. There's 100 wallets now. Scroll down. 150. We're only at 1.1 million. 200, still at 1.1 million. You get the point. There are people that are holding millions of dollars worth of Hex. It's probably locked up because they've gone for 15 years, don't get me wrong. But if one of these people does decide that actually my vesting period's up, I'm going to sell, I'm going to take some profit because I've got it, they are going to crush the market. So for me, that kind of stuff is a huge red flag. I'm going to leave it there with that. And, stay away from it. I'm not here to tell you what to do with your funds, but I would suggest you are in a group in which you're trying to educate yourself at the same time. This is not how you educate yourself unless you want to learn by failure. So I might be wrong. And hey, I'd love to have a conversation with someone that thinks a Hex is any good. I'd love to understand it more if you can explain it to me better. But for me, no, I'm not there. And by default, I'm not there with Pulse Chain. You can probably tell I didn't really give it as much attention as I normally do, but I just thought, what's the point if I'm going to tear it apart? And that's where it is. I'm not even going to put this detail on Discord. I know I normally do each week. This doesn't deserve a second look at it. If you're interested, you can rewatch the video. You can do your own research. That's where it is. Okay, some questions. Missed a bit there. Oh, bloody hell. I missed a hell of a lot. No, I've got loads of charts to do. Apologise if we go a little bit beyond 10 o'clock. Sign Pot 1, Casper 100%. I saw he said he was considering 100%. Yeah, interesting. Casper's being hyped, okay, fair bit on Twitter. I have actually seen a lot more people talking about it on Twitter at the moment. And, there's a genuine reason why. But also, you got to think with these ASIC miners coming out there, they've got money behind them. They're probably trying to push. That's why I didn't put the best thing in here. Sorry. Does anyone know Antoff? Oh, what's the name? Must have saved it somewhere. Here it is, yeah. Andreas Antonopoulos. He put a tweet out right back at the beginning. I've been offered 10 BTC to do an interview about Hex to show it's not a scam. I was not asked to disclose the payment. Draw your own conclusions. This announcement is free. This is one of the OGs of crypto, and he was asked to try and vouch for its scamminess. So, yeah. Anyway. Also remember RT has hyped a lot of tokens in the past and a lot of them have failed. Neo Time Home. Yeah, definitely. I mean, Time, very, very reminiscent. A lot of things in Hex feel about how we did with those rebasing DAOs. Every couple of times a new flavor. Yeah, ASIC mining could cause a huge dump. I was still talking about CAS. Yeah, definitely. If they decide to sell, these things are not cheap. They're like $30,000 to $50,000, I'm not in and no intention. Just keen. Oh, right, okay, that's CAS. Okay, let's get fast through the CAS, blah, blah, blah. Less riskier plays. Same, but to be fair, I'm just not interested in alts yet. Okay. Still on CAS. Right. Marky Mouse says Hex is a scam. Yeah. Nasty forecast. So this deck I found beforehand. authentic pyramid schemes, 38% winning. I took an instant dislike to Richard Hart first time I saw him interviewed. Yeah, he's a bit slimy. He's a car salesman, feels like. Extrapolitan do seem dodgy. He managed to kind of load of people. Look, I didn't even talk about that, but you're right. To get involved in pulse change, you had to sacrifice crypto. You send it to a wallet. That wasn't a burn address, and those wallets got emptied. So I think he got like 1,700 Ethereum out of it when Ethereum was quite high. So yeah, really dodgy. Harry's like the Hulk Avenger of Hex. Yeah, I am, I suppose. Tim Burton's great grandchildren will be billionaires. Better than BTC, no use case. This is brilliant. Got to be a joke, this coin. Please move on. You need to leave. It's time for therapy. Anger management in the charts. Okay. Right. I just don't like it. That's it. Let's get this off my screen. I've got a lot of charts to do. So let's get going. BTC. This is on the market maker charts. Just hide that now. On the daily. So we've been going flat for so long that the 50, the 13, and the 5 and the 8, sorry, caught up. 20 and 200 have actually managed to cross. I mean, this 800 here, it's just flatlining. But what we are seeing is actually this 50 EMA in the cloud around it is starting to catch up. And whilst the other EMAs are causing, a bit of pressure down to the downside, the 50 could act as a catalyst to springboard us up. Now, where are we and what we're doing in terms of market maker? We talked about this last week. I still think that was move 2. This is potentially move 3. Has move 3 completed? Well, we haven't had an M. I don't think a clear M at the moment to say that it has. So is this just like a breathing period within a move up? Bit like what we had here. Where we're just having that period, retest, and then go. Period. A little bit of a retest, I suppose, there, and then we go again. Potentially. But this only went down to the 50. We're getting close to that at the moment. So, this just might feel a little bit longer, and then we may still move up. What's that mean for me? I'm just not really doing anything. I have a bit of BTC. I've actually bought a little bit recently in a hope that it will in the idea that this move isn't finished. The move will go up to around about 34,000. You can sell that and just take a little bit of profit from it. I haven't sold anything. I'm just waiting. I was contemplating it, but nothing's really changed in the last month. Yeah, some moves up and some moves back down, but that's nothing that we're not used to, even in this period. We've had sharp moves up and down in a day a couple of times, and these two here are no different. So nothing's changed. Still looking at around about 29.7, 29.5 as a level to break. And unless we break that, I'm not necessarily interested. I am intrigued as to these zones here. But, a break of 28, let's just say the bottom of this, 28.5, we look at that on the weekly as well. And then maybe we might be considering that we're looking at a bit of a further bearish drop. But again, put that chart out. I don't know where it is. Yeah. I did this that's on the monthly though, isn't it? I put this out in Discord just before the Ripple news, so it's probably lost a little bit. Everything within this still stands for me. It's a major trend line. I tried to do something away from market maker theory in case people just don't buy into that as much and just kind of show you where some things are. But, for me, this level is still held, which we marked up. This is an area that I'd look to potentially see this, consolidation period bouncing, or at least being the spike down of the M before it comes back up and retraces. But yeah, a break of this line, which at the moment on the weekly is 27,000, let's call it, and a close below would suggest we're probably going to look to target these two zones. This one I've just put it on there because it's on high blocks. These are just high blocks charts. Indications of where they are. But they're just my thoughts. But these still look fairly tasty to come towards. And so I'm just going to sit and wait and see where we get to. I don't think there's really too much more to say. I'm not looking to trade anything on a smaller time frame there. And I'm conscious of the time and I've got plenty of other ones to run through. So let's have a look at some of those. So gas, BTC, spiky fade. If it's been spiky fade, I'm not going to be happy. I mean, so we have seen some movements down here. We've also seen maybe a potential bottoming pattern sort of forming in and around here, sort of some sort of cup formation. But each of these purchases have been brought back down. But what is the move? How much are we making? It's all about the risk reward for the spiky fade, I suppose. talking about 20%. That's not bad. 20% to be fair. You know, if you can get the timing on it, but how quickly are these moves happening? I suppose is, you know, what's the reality that you're actually going to be able to hit these? I did my that's it there, isn't it? So I suppose it was over a couple of hours. There's an opportunity there. I lost it all the third hour. So there's definitely a position, an opportunity there. It's just trying to find a good entry point for that to happen and the regularity of those continuing to happen. I suppose we have had two in quite close succession. But for me, I need to see this consolidate at this level for much longer. I think for me, I'm happy to sit out for 3 to 6 months and just wait for gas BTC to sort itself out, and then have a look at whether or not spiky fades are still a thing. But you know, just where do you buy in? We are making, well, they're not higher highs, but we are making some lows here. Does seem to be something like this forming. Potentially, you could suggest maybe there's an entry point, you know, roughly where we are at the moment. But you might want to have a sell order if we break that. Certainly, if we start breaking. So maybe you get in around about 865 sats. But if we break 800, say, you need to get out. But yeah, not really piquing my interest at the moment. It's a shame because, you know, you look at what happened back here. You know, we had that massive lead off. But look at that move, you know, back in sort of February, March time. And it was monstrous to take. That's not spiky fade, you know, although it was over a day. You know, huge moves up there. And, you know, you kind of feel at some stage it's going to bottom and then it's going to do it. And if BTC, gas, spiky fades work, once dominance is climbing again for alts, and we should hopefully see some of these big spikes. But right now, the risk reward for me just isn't there. So I'm not taking it. Next one. GMX. Okay. So GMX for me is kind of... What do I want to say about this? Let's just take some of this stuff off. We're going to market maker it. We're just going to have a look at everything else. So we've had that fall down. We've had that bounce back up. And yes, we are still making higher highs and higher lows. We're getting there. But this is kind of feeling like it's rounding out a little bit for me. And there's a lot of alts that are looking particularly weak. Bitcoin is showing signs of maybe being able to sustain it, but there's a few altcoins that are maybe not seeing that, a bit more rounding, and maybe that is the case here. And actually what we're seeing is this is just an extended moving up of just a, you know, this down here, but then we're gonna start continuing down. I'm not necessarily too sure at the moment. If we did fib levels, which people know I like to do, from here to here, you know, this client, this one breached it, but this one hugged this one quite nicely. Finally got touched 0.5. We've broken the 618 now. This has been a level of turning around before, so let's not kid ourselves. 55 has shown that it can turn around, but if it doesn't, you know, there's no reason why it wouldn't be going to 50, not just from a fib level, but also from previous price action. Kind of seems to tie in with that. And then a break of that maybe down to 43. But I think if it does break this 50, we've kind of lost that uptick momentum. If it holds that and comes back up, we can still class it potentially going in an uptick. And if that's the case and it is still looking to climb, and there's no reason to think that, you know, 62 can't be revisited. And if we are going to continue over several days and months, then maybe we get up to about 67 again. It's not one that I'm really monitoring. I have it on eggs. I know people ask. It won't be forming part of my pot 3 shitcoin portfolio. Sorry if I'm going through this a bit fast. Dots. Oh, Dot's going to look ugly. I know that before I even look at it. Okay, so I don't know if we're getting a bit of a double top forming here on Dot at the moment. Something to certainly be looking out of. But you could argue we had some sort of little head and shoulder here. We had that nice little rise up, retest, come back down, and then have we just formed some sort of M? And we may be looking to break it. The fact that we couldn't really get above 560 is telling, you know, we've not been above 560 since May or since April, really. And yeah, it kind of feels like, again, bit rounding. Are we going to start to fall through? This one looks okay. It's got a bit of a gap between it, but it still feels like that's a bit of a double top on the daily there. Let me just get rid of the rest of those. we'll do this two ways. We'll do from down here to down there. Just kind of showing that why we're getting some resistance, even the spike up to 382. Potentially. Still holding the 618, mind. And if we just do it from down here, do it to this top one. I was going to hit to that one, but I'll do this top one, then we'll zoom in a bit. Not as convinced on that one in terms of the levels. I mean, there's definitely some spikes that are hitting here, but some of these are breached a little bit. Not a huge difference. $5 again is another key level for us. I still got some dot to buy. It's just a case now of, do I just sit on my hands for a few months and just see how this plays out with Bitcoin dominance or wait? I mean, I know I'm not going to do it for every single one, but I'll do it for dot just because I hold it. So, you know, I know the pain. But look at Bitcoin BTC. Just doesn't look like that she wants to turn around right now. I mean, is there a triple top? Is there a double bottom there? And it's just slowly climbing back up. Either way, it's not been healthy for a very, very long time since the bull market. It doesn't really show any signs. We are in price discovery of how low we generally are on that one. Right, Casper. So interesting with Casper, I'll be honest. About a week ago, I was wondering, I put in Discord, are we looking at some form of head and shoulders forming right shoulder? And, you know, it kind of thought, oh yeah, we're getting it. And then it said, actually, no, what, sod off. We're not. We're going straight back up to the moon. And it has performed very well. You know, much stronger than a lot of other altcoins, even before. I mean, this was the pump, wasn't it? Thursday, the Ripple pump, and then everything retraced. Well, you know, Casper didn't. Now, time's already shown that there's definitely some ASIC mining that's coming along. There does seem to be a lot more announcements around that, and you know, I think people are starting to see there's some positivity within it. Even today, you know, we're at 3.5 cents now, and we're starting to challenge, you know, all-time highs of, you know, 3.8. We're getting close to that there. We have been on 1, 2, 3, 4, 6, 8 out of 9 days, and that one's pretty much just a neutral day. 8 out of 9 days of climbing, so maybe not surprised that we might not see a pull. You know, we might see a pullback. To where that could possibly go, but you know, where do I see it? Maybe down to 2.4 or 2.4, should I say? Maybe a spike to take out this liquidity zone here, but yeah, it's definitely going strong, and it looks to be, you know, has a narrative at the moment to help drive that up there. Whether or not some of these miners will look to, not just ASIC miners, just general miners, start to think, you know what, we're getting to all-time high, we're going to take some profit. Maybe that's the time in which it turns it around. I mean, it's a bit pointless we drawing a fib from here to there, because all it's going to show you is we're getting close to all-time high, which is the point I was already talking about. But yeah, I think there's it's looking strong. I can't deny that. My original view on it was from down here. So let's draw I'm going to get rid of these again. Let's just quickly draw the fib from down here where I drew it last time, which I think, off memory, was down here. I think I did it to there. Is that right? Was it this one? I think it was this one. I can't remember exactly. I think it was this one. And I was looking at, yeah, and I was looking at 1 cent, 1.3, 1.6, yeah. So that's right in terms of where we were looking. I mean, these are the extensions now. If that is to play out and we do break all-time high, some big numbers to get there, 7, 9, 15. So for any of you that, you know, had the balls to buy at 1.6, you know, there's some decent returns in a market which, you know, has not been doing that fruitful for us, really. So it's good to see that Casper has been doing that. It's obviously got a narrative to come from that. I'm speculative myself, so I'm just waiting. I certainly don't want to be getting in around this level, given, you know, it's uptick it's had, and for me to get a fresh entry within that just doesn't necessarily seem right. So I'm going to see how it plays with 2.4. A break of that, I'm going to go back to my old numbers. But if it gets there, maybe I have to start thinking about buying a little bag at that price. What time are we on? It's just a bit after 10. Link. Okay. Link. So the link's been an interesting one. You know, this has been over a year within this zone at the moment, and we've always divided that zone, as you know, to two rectangles. That'll do. 750 to 950 at the top, and then $750 to what happens when you do it on a log chart and take it all the way down for you. Let me just change the color of that, because obviously that's not going to work. They were kind of the two zones that we were looking at in terms of where it was operating and how it was operating. And it's kind of still playing out within that. Now, again, you know, since June, been another one that's had a very positive uptick from it. This one looks more healthy recovery than the others, but actually within this, let me get rid of these rectangles now. I want to do something else with it. Kind of wonder, because I can just see it as clear as day on the daily. You know what I'm drawing? Some sort of W there. Is that rise 1, pullback, rise 2? It is, we've got some room to go, or do I need to actually be a bit more brutal? Let's put some of these on so we can actually have a look. So we've got W in there, rise 1, pullback there, maybe, very short consolidation period, rise 2, pullback, rise 3 into some form of M formation. I'm going to stick with the first one, I think, for now. Just say it was more, that's rise 1, and then rise 2. And then, yeah, we're just waiting to see if this is the end of rise 2, or still got a bit to go on it. But yeah, you know, this one's looking strong, above all of the EMAs. Yeah, this level has been attacked twice and defended twice around about 720. But each time we've not really lost that much, and we still managed to contain outwards momentum. So there's nothing saying that, you know, I'm not saying we're out of the wood with Link, but it's you know, it's doing well in some potentially dire circumstances. Yeah, let's have a look at XRP. Still doing strong. Yeah, it had that pullback, sell off, but it's covered all of that now and continuing to climb. Hell of a move. Anyone that was in it around about these levels, great, well played. Good patience there for that one. Matic is another one. Let's see. One actually has given back all of that. When did it happen? Yeah, maybe the 13th. It's fallen down. We covered all of that. Maybe not what I was looking at. Near, that was the other one. So it shot up, and then it's just been stagnating in and around here. Still sort of slowly climbing up, consolidate, whatever you want to call it, but it is above the 50 EMA. Right, I think I'm just sort of rambling now because I've been speaking for 2 hours and 10 minutes. Let me just check, make sure there's nothing in chat. There's no other questions. Okay. Don't think there's anything else in chat. Apologies that I overran there. Sorry if you thought that the XRP was perhaps not as didn't require as much detail. I think it did. Maybe it's just because I read it too many times, but it was interesting to see the exact word, and I think I can just give you some insight going forward. So something to bear in mind. Hex and pulse chain, just avoid. I'm sorry, that's my view on it. And yeah, sorry I didn't get to go in as much detail as perhaps we would normally do on some of these price ones, but with only 10 minutes to go and 7 to go through, I thought I better just skim through them. So they're just on the daily. That's basically just a reflection of the fact that I'm not trading. I don't even know if Simon has any open trades at the moment. But it is the trading pub tomorrow, because we normally do this on a Tuesday, but it is Wednesday. So you can ask him his questions there at 2 p.m. All that's left for me to say is thanks again, everyone, for tuning in. Really appreciated all of that. Thanks for sticking with me and for turning up on the second night. I'll be back to Tuesdays on the usual time. We're doing Immutable X as next week's research token, which I'm actually quite interested in. I think this might be one that I want to have part. It's been a while since I've done a research token that I've actually wanted to get involved within, but I think Immutable X might well be there. So that's on the cards. We've got a couple more after that. But yeah, the other thing. So that half-yearly video is pretty much finished in terms of what I want to do. Just got to film it. One other thing that I'm going to talk about, I posted a link on it. I think it's really worth me doing a video. And it's probably going to be a 20-minute video, come out in August. It's going to be on DOT 2.0. Some massive changes that are happening in DOT and basically an abandonment of the parachain auctions, and how they're going to be sort of utilizing time on the relay chain and everything else. Some really interesting stuff, which I think is a very positive step forward. Obviously, there's some people who see some negative sides to that. I'll try and be as balanced as I can. But most of you know that I'm into DOT, and in case anybody doesn't bother to do the research themselves, wants to understand where DOT is because they're thinking about buying it, I think it's just worth me doing a video. I'm going to do it as a video, not live, and then I'll just post it in the channel. But that's also coming. I think it's going to be a good video. So I just wanted to let you know on that. Have a great night, everyone. Have a great night, everyone. And I will speak to you all soon. Cheers now. Bye.